Okay, party people, let's debrief the day. There's just actually so much to talk about. Okay, we had great day today. Bought Nike off the lows. That was really great. Flipped it. Ended up buying back after some consolidation. Looking good into the close here. I am keeping a close eye on the strength in semiconductors, but I would honestly really like to buy stuff on dips. I would really like a dip on AMD before I get back in there. Devon Energy had a nice rally out of the hole. Shout out to MS for pointing out some of the news about the trade deals. I will just real quick, and I just want to remind people, like, it's never my goal to be political. It's never, I'm not a partisan guy. I think all politicians are equally stupid. That's my official take. But these trade deals, they're not really deals. a lot of the a lot of the deals that have been made are things that were one either going to happen already or actually not contractual agreements that I can build into my thesis as like, oh, this is going to happen. Right now, it's just like it's just promises, but they're kind of empty, and the promises made by politicians. I think, regardless of your political affiliation, we know what our expectations should be for promises made by politicians, right? Even if they're foreign politicians, same story, different language. It's basically what it is. So, and I do think the LNG, when I'm thinking about the LNG though, I'll call it bullish because there are bigger macro forces that are bullish for LNG. For those, I have no clue what I'm talking about. It's liquid natural gas. And I think a headline like this could just draw more attention to the sector and has caused some upgrades and some interest for some big money. So, and even the way this closed, finished into the close, looking strong here. So maybe we'll get a turnaround in those. I'll keep an eye on it. We have a small position. Home Depot was a beautiful trade. The whole did not expect really even the move that we got today, but it was beautiful, right? We actually came in over an A size position because I layered a B size 380 on top of a B size 390. We clocked in 30, 50, 70% on those. And then I rolled those to the 400s, which we then averaged in later into the day. So we're walking away with fantastic profits on a very boring day where the market mostly just sold off or was sideways across the board. Thanks to Home Depot. I think this still has a lot more room left in the tank. I did a little like 2-minute video on YouTube, kind of breaking that down in more detail, though we already did for you guys in the Discord, we already did a recap on Sunday night. We had a great close on AppLovin, which I'd love to see. Really interested to see how that one plays out tomorrow. I know that Abraham loaded up some more calls for August, got a bit more aggressive. I'm willing to do the same, but I was going to be a little bit more patient and wait for tomorrow. I'm trying not to overtrade too much into this crazy week, okay? There's a ton of data coming out that isn't even really related to additional to rather the economic data that we're getting, the macro stuff and also the earnings reports. So like even today we got a Q3 report on borrowing. The government's borrowing way more than expected, spending way more than expected. And that's honestly, if you're like Abe or like a lot of our Discord members, you're trying to long bonds, that report is not what you want to see. Bonds are probably going to be dead in the water for quite a bit longer. I mean, the only thing that could maybe save like these further out on the curve bonds like TLT where your 20-year plus is going to be maybe a rate cut, but I think even this is not going to have a muted reaction just because that this fiscal situation is getting out of control. Great for equities though, because they're probably just going to keep going up. So yeah, I think that's about all I wanted to cover on that. And the big thing that I also am hadn't really been typing about a lot on social media or on Discord. As lots of you know, I got out of a lot of my ETHA or Ethereum exposed calls, and I was looking for a pullback, and we're starting to see some of that pullback. We actually went a little bit higher than I expected, went ahead and tapped the top of the wedge. Now we're at a very interesting position, okay? And this is where I'll kind of lean back on some historical analysis here, okay? So we look at the structure development here. The last time that we got the monthly flip, keep in mind that right now the monthly TTM hasn't even flipped for Ethereum. So we're starting to get that flip. It's starting to improve. The RSI is looking really good, but we haven't quite got it, right? And then if we look back at the last time where the monthly began to flip, this was actually a little bit more exaggerated. First of all, every candle after that's green month over month over month, right? But we can also see, if we look at the daily, the day-to-day price action here, that there's a lot of rug pulls back to the bullish EMA, where, you know, even some fake outs where it looks like it's going to break down and then ends up powering through, or where the daily does a full retracement to the downside, even though it's clearly still an uptrend on the day-to-day. So I'm looking for different price action like that. If we get a nice pullback all the way to the bullish EMA here, this is probably where a lot of people are going to say, okay, the run's done, you know, now we're going to do the multi-year chop. But I'm going to lean on the way that this monthly momentum is forming, and I'm going to say, I'm going to buy that with both hands if we get that pullback. And that's not even just for Ethereum, but Solana here too, setting up this nice parallel channel. And I'm looking for this to actually give a breakaway out of the parallel channel and do another parabolic run straight through all-time highs and up into the 300s potentially as well. As I've said many times before, you know, well before Ethereum began this rally, you know, my positioning size is Ethereum, Bitcoin, and then Solana. And then I have SUI and ADA and a few others as well. I don't really talk about much, but I do have exposure on those. On this next dip, I'm definitely going to play with the perpetuals on Coinbase. I'm going to actually leverage up as well. And I'm also going to be buying those calls. Now, I think for this next round of calls, there's been some new toys to play with. So we have the EMND. That's not right. We have the, hold up. I know I shared this in the Discord. BMNR. BMNR. And then we also have the IREN. Both of these having really nice pullbacks here. Okay. And I would like to buy these on dips instead of ETHA. When you're thinking about or forming this, or maybe like me, you got like 10 accounts you're all managing right now, think about your exposure to the crypto space in totality. Okay, so think about the Ethereum exposure you have, add the exposure you have in another account, and think about it in the totality of your net worth. Okay, so make sure that you don't overexpose yourself. Okay, you're being responsible and thinking about the construction of all your portfolios in relationship to one another, and then also the substructure of each portfolio, and making sure that it's well balanced as well, and you're not unintentionally getting lots of exposure. Me, you know, you guys know I'm crazy. You know, 2024, I put half my net worth in Tesla. So, you know, it's okay in my book, in my opinion, it's okay to say balls to the wall. I got convictions. I want to express them with my capital. Do it. More power to you. Okay. Now, one of these pussies is going to be like, oh, you have to have 1% in each. We're traders. Okay. We're traders. We're here to put our balls on the table and say, I'm the man. Okay. So just don't unintentionally do that by not paying attention to each of your portfolios. Right. So, keep that in consideration, because even I've made that mistake where I don't realize, like, oh crap, I have way more contracts in this portfolio than I thought I did. And when you combine that with my share position, and then you combine it with like my Roth position, and then you combine it with like the option contracts I have, and I have futures exposure, shit, you know, I've been caught with my pants down, sagging too low. And I don't want you guys to make that same mistake. Okay, so keep that in mind. So that's kind of what we're looking at here. I will also like to talk about, because we mentioned it on Sunday Night Prep for Discord members, and I'll just go ahead and share this, and I'm probably gonna post this to YouTube as well, that we are in a very precarious spot. You know, we've talked about how this was a top signal for us, but we've actually come back to our top signal and bounced off of it with good volume, or with improving volume. I can't really call the R ball being below 1 good, but it's improving. It's going in the bullish favor. We'll say that. This might just squeeze higher, or this environment and this setup reminds me of 2018 plunge, which, I mean, you might not remember, you know, especially you younger traders or newer traders who got in, you know, after trading became cool in 2020. Don't remember that there was a day where the Fed had a meeting during the holiday season while everyone was bullishly positioned and balls to the wall, where the market had a little temper tantrum because of the Fed and had one of the worst one-day plunges we've seen in a while. It was followed by a miraculous recovery out of the hole that made the end of my year that year amazing, because I bought calls out of it. But there is potential for that. And so I think there's some really asymmetrical risk reward to buy some puts into this Fed meeting this year that, could go to zero, could print 600%. So, I mean, that's just something to consider as well. And even if we do get the plunge, we are in kind of in an environment where the appetite to buy the dip is so incredibly strong than we've seen in the past. And we also are on the peripherals that somehow isn't making major headlines, getting some insanely bullish AI headlines. Like, I do want AMD on a dip. And I'm kind of wishing I had it in the long term. But I would not, we're seeing, banks are thinking about cutting 50% of their call centers. We're hearing about some call centers going fully automated. We're hearing law firms are going to do massive cuts, 30, 40% of their staff as well. That is massive. And this isn't stuff that is expected to happen, in 2035. No, we're hearing that they're doing the testing for this stuff so that they can do it next year. Massive. Hold up. Hit the brakes. Massive. Huge. What's that going to do? It's kind of hard to predict, right? What are we going to crash the market? All the money's going to pour into the AI stocks. We're going to fully realize the techno future. Where it's like just buy technology, nothing else matters, and then maybe some energy as well because you got to power all this tech. I don't know. Something to consider, but yeah, just step back. Let's step back. Let's step back. Let's step back. Let's calm down, and let's also just remember that this is a time period with a insane. I wish my dog would shut up. It's very distracting. This is a time period with a insane amount of probabilities and a aggressive amount of uncertainty. Okay. And if you yourself, looking at this market environment, want to look at these uncertainties and say, fuck this, I'm going to go cash and I'll be back next week when some of these certainties are clarified, trends are formed, and I can play with a better view. We will never have all the answers, right? As traders, we have to embrace uncertainty. We have to lay out all our probabilities, and then we just got to formulate our plans for those probabilities. And our edge is coming in and looking at the technicals that give us the entries into the probabilities that we see so that we can be one of the first ones to react and then make money, right? And sometimes you don't even need to be the first one to react. You can wait for the clarification. You'll make less, but you'll also get more. You have a higher win percentage, right? And I'm definitely someone who's a little bit more like that. That's why my win percent typically is higher. Last year for the full year, we had over 80% win rate. So far this year, we're a little bit low though. I think we've climbed up to like a 78% or something. So I would like to get that up higher, but I'm derailing myself. The point is that think about the uncertainties, embrace the uncertainties. If you want to go cash here and you kind of want to avoid some of this craziness this week, that's okay, but at the same time, I love crazy weeks and we're going to make a killing. It's going to be fun. Regardless of what happens, all probabilities lead to me making a bag and I'm excited for it. Have a wonderful night. God bless, guys.